purpose reporting entity. Government may operate through some separate public authorities. Okay, so what to report as a government is a question. So let's get to the reporting entity. So what is a government reporting entity? It consists of a primary government and its component units. So let's talk about these two things: primary government and component units. First, primary government. Any state government, general purpose local governments, or a special purpose state or local government can be a primary government. We're talking about state, county, city, although county is part of the state, city could be part of the county, right? But they can all be primary government. And for a special purpose government, we're talking about, for example, school district. In order for a special purpose government to be a primary government, it must satisfy the following conditions. It has a separate elected governing body. It is legally separate from other primary governments. It's physically independent, and it has authority to determine its budget, right? To levy tax and to issue bond. So let's get to the component unit. So component unit is a legally separate government, okay, for which elected officials of the primary government are financially accountable of this legally separate entity. So this is one way to find a component unit, right? The primary government officials are financially accountable of the entities. Another way to find a component unit is exclusion of component unit might cause the primary government's statement to be misleading. So we're going to talk about details about these two criteria. Examples of a component unit. For example, the State of New York established Municipal Assistance Corporation. Right, this is a legally separate entity to help the City of New York during financial difficulties. Right. However, the City of New York, the mayor and the officials of City of New York, they're financially accountable of these corporations. Therefore, the Municipal Assistance Corporation is a component unit of the City of New York. So they should be reported together. Alright, how to determine a component unit? Okay, we have to cover this topic in this flow chart because it's not that easy. Okay, so let's talk about it. There are several ways to be a component unit. First, right, this we call this potential component, PCU, will be a legally separate entity. Okay, and if it's a legally separate entities, now we're going to check financial accountability, whether the primary government elect officials are financially accountable of this entity. So how to determine financial accountability? Let's ask two questions. Does the primary government appoint the voting majority of the PCU's board? Okay, if the answer is yes, then we ask another two questions. Is there a financial benefit burden relationship? Or is the primary government able to impose its will on the PCU? If any of the answer is yes, okay? If any of the answer is yes, then we say this is a component unit. So this is the first root. We're going to draw the first root right here. So we're going to talk about these criteria in the next slides. Okay, there's a second root to be financial accountable. That is, we're going to go through this question again. Does the primary government appoint a voting majority of the board? If the answer is no, we're going to answer these two questions. Does the PCU meet the fiscal dependency criteria? And is there a financial benefit burden criteria relationship between the PCU and the primary government? Both answers have to be yes. Then we have the second root. We say it's also financial accountable. Okay, then it's a PCU. Oh, the PCU is a component unit, is a CU now. And there's another route. Okay, go through this pass here. Okay, if we couldn't pass the financial accountability test, the answer is no. Okay, we're going to ask, would it be misleading to exclude the PCU? Right? If we exclude PCU, then the primary government's financial statement will be misleading. If the answer is yes, it's misleading, then okay, this unit will be component unit. So there are three routes, right, towards being a component unit. So let's get to the those concepts, those questions we are asking. What does it mean by impose its will? It means that the primary government can significantly influence the program activities or level of service provided by the PCU. For example, the primary government can remove appointed members of the CU's governing board, right? Can modify its budget, can approve or modify its fee charges, right? Or can even appoint, hire, resign, or dismiss the managers of the CUs. Then we say the primary government can impose its will. What does it mean by benefit burden relationship? Basically, we mean the component unit provides specific financial benefits to the primary government, or it imposes specific financial burdens on the primary government. Right? For example, the primary government is entitled to the component unit's financial resources, but the primary government is obligated for component unit's debt. Okay, so it means there's a benefit burden relationship between these two. And finally, fiscal dependency. What does it mean by fiscal dependency? It means that PCU is unable to determine its own budget, levy taxes, or set rates, or issue bond without approval of the primary government. Okay, so these are the key criteria we use to determine whether it's a component unit or not in this flow chart. Okay, once we determine its component unit, we have to decide how to present it. There's two ways to present component unit. We have the discrete presentation, and the other is blending presentation. Discrete presentation is a default means of reporting. So we're not going to report component unit in final statement. Okay, we only report component units in the government-wide statement in a separate single column. Okay, basically we're going to separate this from the data from the primary government. And for blending presentation, we're going to treat transactions of the component unit as part of the primary government because they're so closely connected. So how do we determine whether we're going to use blending? Okay, so these conditions must be met. The component unit's governing body is substantially the same as the governing body of the primary government. The component unit provides services solely to the primary government, and the total debt outstanding is expected to be repaid entirely or almost entirely with resources from the primary government. So we're going to take the component unit as if it is part of the it is a unit of the government, of the primary government. Therefore, the transactions will be reported in funds in final statement as well as a government-wide statement. But we're not going to separate reporting these component unit. That's a blending presentation. In respective of how, right, it is reported, the primary government must disclose detailed information about each major component unit. So back to the flow chart, we also have these. If we continue with the flow, we have these criteria lead us to whether it's a blend presentation or a discrete presentation. If entity is not component units, it could be part of the following units. Could be a joint venture, right? This is their contractual agreements to carry out common activities with the participants sharing both risk and reward. Basically, these are the joint ventures. Could be joint ventures between two primary government, or between the government and a corporation. So, for example, Dallas and Fort Worth joining together to construct and operate an airport. And this airport will be a joint venture between these two primary government. And joint ventures may be recorded as an investment and disclosed in notes. Okay, if we are using proprietary funds to record, right? If we use general fund, then we're not going to show this as an investment, right? Because general fund does not, or the government fund do not report long-term assets. So that's a joint venture. And also it could be a related organization. So what is related organization? The government appoints board members but for which the government has no significant financial accountability. So it does not qualify as a component unit. And if it's not a component, we're not going to report it. And cannot be incorporated in the primary government's financial statement. We're going to disclose the nature of its accountability and related party transactions between the related organization and the primary government. We look at the flow chart, right? If it's a legally separate, right? And does the primary government appoint a voting majority? Yes. However, right, it does not pass the financial accountability test, right? There's no financial burden benefit relationship, and the primary government cannot impose its will on the PCU. So it is a related organization which will be disclosed instead of being reported in the financial statement. The next is affiliated organization. Affiliate organizations provide assistance, both financial and non-financial, to the associated government. Okay? The primary government does not appoint governing boards of the affiliate organization, and these organizations are not financially dependent on the primary government. And resources held usually are not significant to primary government. Right? Examples like universities development foundations, universities football booster club, and the most frequently seen, the public schools parent-teacher association. So in a flow chart, we can find the affiliated, right? It's a legally separate. Yes. Does it appoint board members? No. Does it have any of these dependency or burdens or relationships? Right? The answer is also no. And it's not that if we exclude it, it's not going to misleading. So yeah, it's right here. The PC is not an CU in this case. It could be a joint venture or affiliated organization. It's right here. Okay. Now, once we know how to determine whether it's a CU, let's take a look at this example. So I'm not going to read. Now I give you a minute to read, and let's talk about what it is. Okay. So a legally separate financing authority was created. Okay, legally separate. Okay. Basically, by providing mortgage loans to home buyers. Okay, the governing body of the authority is appointed by the governor. Okay. And the authority determines its own budget, holds title to property in its own name, and controls its own day-to-day operations. So basically, right now, let's go back to the flow chart to see the root, right? Yeah, it's legally separated. And does the PG appoint a voting majority of the board? Yes. Now we need to check these two questions. Their financial benefit burden relationships, or is the PG able to impose its will on the PCU? Looks like does not impose its will. Let's read, right? Because the authority determining its own budget, holds title property of its own name, and control its day-to-day operations, right? Control, hold. Right? Then mortgage loans are made according to guidelines included in the authorities enabling legislation. The authority is permitted to issue debt subject to statutory limitations. Okay, and in the event that the authority determines that funds will not be sufficient for the payment of the principal and interest on its bond during the next succeeding state fiscal year. Okay, here comes key sentences. The chairman of the authority certifies to the governor the amount required to pay such principal and interest. The governor is obligated to include this amount in the state budget. Okay? What does it mean? If the authority cannot pay, then the state is going to pay for it, basically. Right? So what is that? Right? Check these benefit burden relationship. A legally obligated for or assumed obligation, right, of the financial of the CU's deficits is obligated to for CU's debt. Obviously, it's there is a benefit burden relationship, right? Because these authorities provide benefit to the basically help the state, and the state as a return they is going to share the burden of this authority. So we determine that it is a component unit. Yeah, it is a component unit. But how are we going to present it? Next question. So let's go back to the blending criteria. Right? Is the CU's governing body substantially the same as the governing body of the primary government? Probably not. Right? See, provide service solely to the primary government. Yeah, they're helping the public. Could be, but the total debt outstanding is expected to be paid entirely or almost entirely with resources from the primary government. This is false, right? In this case, it is not. Unless there's a deficit we couldn't meet at the end, then the state is going to pay for it. So obviously, this component unit will be reported separately in the discrete presentation. Okay, comprehensive annual financial report. This is what we are going to right? We prepare everything just for this report. This is also known as a CAFR. This report is divided into 3 sections, basically. You have introduction, financial section, and the statistical section. In the introductory section, we're going to have the following content. We're going to have a cover and title page, table of contents, a letter of transmittal, which could be the key right, and followed by any other materials deemed appropriate for appropriate by management. So the key here is letter of transmittal. The letter of transmittal is one of the most important sections of the CAFR. There's 4 main sections in the letter. There's a formal transmittal of the CAFR Okay, basically it's well summarized of the government's performance. And there's a government profile, history, right, and the people, and what they have been doing, right. Then information and economic conditions of the jurisdiction. Then awards and acknowledgement. These will be included in the letter of transmittal. Right, we have seen this already. Next, we're going to have the auditor's report. Auditor's report provides assurance about the fairness of the financial statement. It's very similar to the audit report to the business, but we're going to talk about auditors auditing with lecture. Okay, that's again, it's a little bit different from the business world auditing. Then we have this management discussion analysis, MD&A. So MD&A is based on facts, decisions, and conditions known to management to the auditor's report date. Okay, basically, managers are going to compare current previous years and discuss positive and negative aspect of the performance, right? So a lot of information will be disclosed in MD&A. We have a discussion of the basic financial statement, condensed statement, right? Analysis, and going to discuss capital assets, long-term debt activities, infrastructure assets, and future effects of currently known situations. All these will be discussed. Could be the most informative part of all the reports. Now we have the financial statement. Okay. Financial statement includes government-wide statement, and then we're going to present fund financial statement. For each fund, we can have the fund financial statement, and then we're going to have notes to the financial statement, right? In the notes, we're going to explain the accounting policies, right, and explain some major accounts, right, including the capital assets, right, long-term debt, and inter-fund transfers and balances, and people care about the OPB and pension, other post-retirement benefit. Okay. Also the budgetary comparisons, right? Budgetary comparisons, the actual versus budget comparisons. Also infrastructure assets will be disclosed right here. And after that, there's a section for required supplementary information, RSI. For example, we have budget to actual comparisons will be fully disclosed right here. Right? Details of pension actuarial valuations, all the data will be disclosed. And the combining statement, individual statement, and the schedules, especially people look at capital, the capital project, right? Capital outlay schedules also. A detailed depreciation will be disclosed also. Then you have the supplement and support the basic statement. and also it provides details of the non-major funds. Because non-major funds usually in a fund statement they're combined together as one column called a non-major fund, but here in RSI, right, more information will be disclosed. So do the the component units, right, in the government-wide statement, they are combined, disclosed in a single column if they are disclosed in a discrete way. Here, right, no matter what, it's discrete or blended, okay, we're going to disclose detailed information of those component unit. And the final section will be the statistical section. In the statistics section, you're going to provide financial trends, right? Revenue capacities, debt capacities, demographic and economic statistics, and operating data. Okay, and usually the good analysts will find the most useful information from these disclosures. There are a lot of pages in this statistics section. Preparing fund financial statement is a daunting task because we only talk about a few funds, but those are major funds, okay? And actually we're going to focus on major funds, but there are other non-major funds. So how to tell whether it's a major fund or not? Okay, we're going to use the following criteria. Okay, so if the certain other governmental and enterprise funds meet certain criteria, they will be reported as major funds. Otherwise, it's non-major fund. So what is the criteria? Actually, there's two steps. 10% criteria. I call this 10% criteria. First, the this fund's A's assets, okay, divided by all governmental funds assets will be equal greater than 10%. Or this fund's A's revenues divided by all governmental revenues will be equal greater to 10%. Or expenditures equal greater than 10%. Anyway, so if any of the major account from this fund A, right, if it's 10% or greater of the all governmental funds, then it's possible it's a major fund. But again, we can move to check step 2, which is a 5% criteria. The same thing. The fund's A's assets now divided by all governmental and enterprise funds assets will be equal greater than 5%. Now we include the enterprise fund also. Now it should be also equal greater than 5%. Okay, if it satisfies both the 10% and 5% criteria, we say it's a major fund. Otherwise, it's a non-major fund, and will be reported in a combined column. All right. So this is examples how we report funds, governmental funds. So this is a balance sheet. We know it's for the government funds. So in these 4 columns are 4 major funds, including general fund, debt service fund, capital project fund, and the grants. Okay, if you can check the numbers, for sure the debt service, capital projects, and grants, one of the accounts is greater or equal greater than 10%, and then satisfy the 5% criteria. Okay, I'm sure all the four they satisfy those two criteria. But if a fund does not satisfy those criteria, it will be reported as non-major governmental fund, and the company could have a lot. Right? For example, City of Houston actually have the non-major fund. 5 non-major fund, right? A public safety special fund, public works special fund, housing special fund, parks recreation special fund, and other special revenue fund. And these will be combined into one column, non-major governmental fund. Okay. And also let's check how these government fund is reported. Assets, right, followed by liabilities, and then it has a deferred inflow. We don't see any deferred outflow. The deferred outflow will be reported here with deferred inflows. Then its fund balance. As you can see, for government fund, we talk about that. Government fund, the fund balance will be reported based on their restrictions, starting with most restricted, non-spendable. Right? Non-spendable resources include prepaid inventories and notes receivables, non-spendable, and also have committed, right? Restricted, assigned, then unassigned. Then we have the total fund balance. So this is the balance sheet of the governmental fund. And also we don't see any component units here because they're only the blended one is part of these accounts, but those discrete ones are presented in a separate statement. We don't see it right here. There will be, we're going to see component units in the government-wide, but not in funds statement. They will be disclosed. Details will be disclosed in a separate statement. So if you get City of Houston's CFR, you will find the CU, detailed CU statement, and actually we can find a lot of the component units, a lot of them, right? And some of them we may see often, like the right, for example, the Memorial City Redevelopment Authorities. You've seen these in the news. In fact, most of these authorities are, they after the Harvey. Some of these are they were dealing about the flood, flood work a lot. So these are component units of the City of Houston. Now let's turn to the next fund report. That is a statement of revenues, expenditures, changes in fund balance. The governmental funds. It's like income statement of the government funds. Let's see that. The same columns are presented. Now we're going to report revenues, expenditures, okay? And also we're going to report other financing source or other financing use. Right, for example, the proceeds from issuance of debt, sale of capital assets, transfer in, transfer out, and other things. Then we're going to have the change in fund balance. Change in fund balance. Okay, as you can see, for the City of Houston, this is for fiscal year 2019. Ended June 30th, 2019. General fund deficit, right? for this year, the change in fund is negative, but the balance is still positive. It's also there's a deficit from the debt service, and not major government the deficit, but there's a lot of grant. Okay. But if you look at the balance, they're all positive. Right, the fund balances refers to the fund balances right here, right? All right. So that's for the governmental funds. And for proprietary funds, which is business related, we also have the fund statements. Look like this one. This is a statement of net position of proprietary funds. Okay. There's two major funds under for proprietary funds. One is enterprise fund, the other is internal service fund. Okay, and this is how we report. We report all the business type activities. Enterprise fund listed by their major enterprise fund. Three major enterprise fund. In Houston, we have airport systems, convention, entertainment, and combined utilities. Okay, we have the total for all the business type activities. Then the last column is for governmental activities, internal service fund, because it's basically governmental activities for internal service, right? And this is for business activities. So for the statement of net position, we're going to report assets, right? The same thing. And basically, it's going to be very similar to the balance sheet for under FASB, right? Assets, major, current and non-current, and also list all the capital assets. The way we list capital assets is we list all the capital assets. I'm going to less accumulate depreciation, right? Then we have the total assets. Then we have the deferred outflow resources. Then we have the liability section, current liabilities and non-current or long-term liabilities. Total liabilities, deferred inflows of resources. Okay, and finally we have the net position. Net position. So this is how we report net positions. Several items. First, we have the net investment in capital assets. Right, basically these are the net assets less depreciation, accumulated depreciation, less the related debt. Okay, we have the restricted net positions because all those debt service, right, those funds are restricted. And capital improvements also restricted. Well, these are the restricted funds, and the last will be unrestricted funds. And next will be the statement revenues, expense, and the change in fund net position for proprietary funds. Right, the same columns, but now we're going to report their revenues and expense. First, we report operating section. operating section, operating revenues, and operating expenses. Next, we report non-operating section, operating revenues and non-operating revenues and non-operating expenses. Non-operating means it's not their main business, basically, right? Then we have this capital contribution, transfer in, transfer out, can also affect the net position of the fund. Then we have the change in net position, and then the this total net position refers to the net position statement. Right, will be this one, the same thing, net position. All right, so this is for proprietary funds. As we said, in proprietary funds, we also need to provide the cash flow statement. Right, this is very unique. We don't have cash flow statement for the governmental funds, and also we don't have it for the fiduciary funds. So only the proprietary funds has a cash flow statement. So I think we talk about that. 4 sections, right? Cash flow from operating, cash flow from investing, cash flow from capital related financing, and cash flow from non-capital related financing. 4 sections. Those are, we're using direct method. Then right here we have the indirect method is presented as a reconciliation. So basically we're going to show how we're going to get the cash flow from operating income. Now we have the fiduciary. The statement of fiduciary. First, statement of fiduciary net position. Again, we listed the main trust funds. We have, for his City of Houston, we have pension trust fund, private trust fund, agency funds. Okay, those are the major ones. So assets and liabilities. Okay, and net position. We do have net positions for pension trust fund and private trust fund, but there's no net position for agency funds. For agency funds, it's only assets and liability. That's it. No net position, because agency funds is not part of the. It's just used to record a receipt, right? To be paid. It's used as accounting, basically. And for the statement changes in fiduciary net positions, this only works for pension trust and private purpose trust. Okay. See, it's different from the other funds because we show the additions and deductions. Okay. For additions, we have additions from contributions and from investment, and for deductions, it's for the usage of those funds. Now, we have seen all the funds statement. Now, if we combine all the funds together with their component units, we're going to have the statement, the government-wide statement. First, the statement of net position. So let's go through this to see the format of the government-wide statement net position. First, you can see several columns. We separate activities by governmental activities and the business type activities. Okay, see the business type activities mainly from the two proprietary, right, and fiduciary, and the governmental activities mainly from the governmental funds. And also here we see component units. Eventually, they are reported aggregated by governmental component units and business type component units. Okay. All right. These are the columns. Let's talk about roles, and we start with assets listed by their liquidities. So short-term assets and current assets and non-current assets, right? And also we're going to see capital assets. And we have the deferred outflow followed by total assets. The next one will be liabilities. Then we have the deferred inflows. And finally, net positions. With the net investment in capital assets, we have seen this in the same thing in the proprietary funds. We have restricted net positions, and then unrestricted. We can see for City of Houston, right? It's a huge deficits in the government-wide, especially in the governmental activities, huge deficit. That's thousands. That's $6 billion deficits, 2019. That's a lot, right? Business type, it's okay, but still a small deficit. But government-wide, governmental activities, huge deficit. And let's go back to the assets, internal balances. Okay, we talk about internal balances. For each, for example, for two government units, they may have transfer in, transfer out. They may also have the payable, receivables. Right, those are internal balances. So when we summarize all the government activities, right, their internal balances will offset with each other already. So do the business activities. But there are some payables, receivables between governmental and the business type activities. And these numbers will be reported right here. Okay, so this become these are payables, basically internal balance to business type. And here business type, these are receivables from governmental. But if we listed them together, if we combine in a combined government-wide statement, these two will offset with each other. Okay, will offset with each other. But we need to report them for the separate columns. But the total will be zero. There's no internal balances in a government-wide statement. And also, if you look at capital assets for government activities, we don't see these numbers in the governmental funds. We don't see these because when we have a capital outlays, they become expenditures, right? We do not record capital assets, nor do we record depreciation. So all these numbers will be adjusted and be added back to the government-wide. For business type, we already have these numbers in the fiduciary, in the proprietary, the enterprise funds already. So these are easy ones. But these we have to add them back. So we're gonna also add back all these non-current liabilities. Long-term liabilities will be added back. Okay. So if you look at Houston's, one of the major complaint about is pension and other post-employment benefit liabilities, right? Municipal net pension liabilities, police office net pension liability. Add all these pensions together, that's almost almost $6 billion. Oh, seven, that's a firefighter's net pension. $7 billion pension liability. Okay, net pension liability. That's a lot of money. That's a lot of money. And this net pension liability means the pension trust fund cannot cover all these things. So the city of Houston owed to these people, the employees, almost $6 or $7 billion in pension payment. That's a huge burden. That's why we have these huge deficit right here. Okay, because the pension. Okay, then we have the next one is a government-wide statement of activities, similar to the income statement. And this is kind of different from the income statement we have seen for the business companies. So first, it's reported by functional programs. So we have the for primary government, we have government activities, right? We have the business type activities. Then we also have the component units, governmental and the business type. Then we report these programs' expenses and programs' revenues. The revenues is further decomposed to charges for service, operating grants, contributions, then capital grants and contributions. So different source of revenues. Okay, then we will have the net revenues or net expense for that program. You can see the government type and the business type are reported in different columns. Right, and here we have the total for the component unit. Okay, that's for program specific. Then next we reported the general revenue. For government activities, we have taxes, all kind of taxes, contributions, and transfers. So for the business type, we also have the some taxes, right, and contributions and transfers. And we have the total. Then we have the change in net position for the year. This is a change in net position. Then if we add the beginning net positions, we're going to have the ending net positions. Ending net position. Again, for a government-wide, for government activities, we see actually a loss, right? A loss, a negative change in the net positions, and the total is a deficit again. Total net position is also a deficit. Business activities is okay. You post a profit basically, and the total is also positive. Also, among all their expenses, program-specific expenses, you can see probably the public safety is $2 billion expenditure. Expense, $2 billion expense is the largest one, right? Very likely it's for the police expenditure. Right, this is the biggest. Actually, public safety is the biggest expense for any of the government, state, right, and municipal level, especially for municipal level. Public safety is the biggest expense. So there's a lot of information to read, to digest, so we're not going to cover these things for now. All right. Converting fund statement to government-wide statement. So basically, the government-wide statement is combines all the fund statement plus component units. So, and we did mention there's a lot of work to do, right? So let's see, in general, what are those work? So inter-fund transfers are eliminated, okay? And also we're going to eliminate revenues and expenses for internal service fund. Let's take a look at this one, right? The city has an internal service fund as a central purchasing agency to acquire supplies and sell them to various city departments. The fund statement of revenues, expenses, and change in funds net position shows the following information: operating revenue, $240,000, operating expense, $230,000, and net change in net position, $10,000. The internal service funds revenues were obtained from sales of $200,000 to department classified as general government and $40,000 to department classified as public works. Okay, so eventually we're going to combine them together. Let's think about it. The internal service fund sell $200,000 to general government, so the general government is going to post their expenditure, right, $200,000, and the public works is also going to post their expenditure $40,000, right? But for the same transactions, the internal service fund book revenue $240,000, then it's going to book expense $230,000. So for the same transaction, the government as a whole booked the expense twice. One in internal service fund, and then by the individual other units, other funds. Obviously, there's a duplication, right? Duplication, and also this revenue. This revenue is based on selling, right, stuff to other department. And if you consolidate all the funds, it's not revenues anymore. We'll get offset. So if you take a look from the government-wide perspective, what is this transaction, right? Basically, this transaction is the general fund and the public works fund. They purchase supplies. And that's it. Okay, and the total for them, the total expenditure to purchase those supplies should be $230,000, not $240,000 currently booked. Okay, so in the following journal entry, we're going to remove internal service fund. We're going to remove internal service fund revenues and internal service fund expense. So redo the revenue expenses. Okay, and we eliminate the net change in internal service fund. In addition to that, we're going to reduce the expenditures from the general government and public works by $10,000, because currently the expenditure is $240, right? The true expenditure should be $230. So we're going to reduce by their proportion, by the total, the 10,000 reduction in total expenditures. Okay, so by recording this, we can correctly show numbers on the government-wide statement. Other things we need to adjust: capital assets related accounts, right? Because in government funds we do not record capital assets, and we do not depreciate. So we're gonna redo, right? Adjust, can add capital assets there and their accumulated depreciation back to the government-wide statement. And here we're gonna add a net position in capital net position, and we're gonna record a current year's acquisition by reducing expenditures and increase capital assets. Because when we record it during the year, right, all these are expenditures. Now in the government-wide statement, they become capital assets. And then we're gonna do the current year's depreciation. This is regular depreciation, right? We have seen, right? Debit depreciation expense, credit cumulative depreciation. Okay, so by doing this, we adjust the capital assets and the depreciation accounts. For the same reason, we're going to adjust for long-term debt. Okay. First, the beginning of the year, long-term debt will be added, and net position will be reduced because of that. And then we're going to adjust the current year debt issuance. Right, we're going to reduce the other financing source, then credit bond payables. Also, we're going to record the current year redemptions. Remember, in the government fund, when we pay off the debt, it's just it becomes expenditures, right? In fact, it's not expenditure in government-wide statement. It's just a reduction in long-term liabilities. So we debit bonds payable, then we're going to reduce our expenditures, bonds principals. And for interest expenditures, there's no need to adjust, right? Because anywhere it is interest expense, right? Example, right? At the beginning of the year, the city had capital assets, accumulated depreciation, and the capital outlays during the year, 83. Depreciation on the capital assets on hand at the beginning of the year and acquired during the year was 41. Okay, so we have seen the journal entry in the previous slides. So we know what to do, right? First, we're gonna debit assets, add assets back. So it's a debit, right? We're gonna debit assets back, and we're gonna credit accumulated depreciation. The difference between these two is a net position. So we can also credit net position, right? That's one journal entry. And then the next journal entry, we're going to adjust this year's capital purchase, 83. So we're going to debit capital assets, 83 million, and we're going to credit the expenditures, right? Credit expenditures. And the next journal entry, we're going to record a depreciation for this year's depreciation, right? Basically, we're going to debit depreciation expense 41, then credit accumulated depreciation $41 million. Okay, that's a adjustment for capital assets. And adjustment for bonds. So outstanding bonds payable at the beginning of the year, 614 million. So these are not shown on the governmental funds statement. So we're going to add them back. So we're going to credit bonds payables. Then we're going to debit net position. Right? And new long-term debt issued. Okay, new long-term debt issued was recorded at other financing source. Now we're going to add them back to long-term debt. We credit long-term debt, then we're going to debit other financing source. Okay, and bond redemptions. Bond redemptions was reported as expenditures. Now we're going to debit bonds payables and credit expenditures. Right? So after these adjustments, both long-term assets and long-term liabilities will be ready to report. Okay, but there are other adjustments. So it's not an easy job. Other adjustment convert modified accruals to full accrue basis. Okay, because the governmental funds we use modified accrue basis. So what are those major adjustments? Okay, we're going to adjust revenues in the fund. Okay, what are those revenues? The deferred revenues because of the availability criteria. Okay, and certain liabilities because the liquidated with expendable available resources criteria. Okay, for those revenues and expenses, they will be added to the government-wide statement. For example, the city started the year with a deferred property tax 10,000, and the entire amount was collected during this year. Property tax of 800,000 were levied for this year, but the city actually collected 760,000. It expects to collect 250 more in the first 60 days of the next year, and the remaining later in the next year. Estimate the amount of revenues in the governmental fund, and the government-wide statement. So let's see what are those revenues for the fund and the government-wide statement. Right, so let's see for a governmental fund. Let's see what has been actually received. Cash. Right, we received, we collected 760,000. Okay, we also collected 10,000 from the previous years as a deferred revenue, but we collected cash this year. And in addition to that, let's apply the 60-day rules. We collect 250,000 during the first 60 days next year, right? 60 days of the next year. So this can also be counted as this year's revenue. So total, if we add them together, that is 795,000 can be recorded as revenues in the government fund, and the government-wide, as we adopt the full accrual basis, and so this become obvious. The full accrual basis full group basis, that's very easy to see that we're going to record right, the property tax bill levied as the revenue for the government-wide statement. So you see the difference will be right, $5,000. So when we convert government funds to government-wide statement, we're going to adjust, right? We're going to adjust the 10,000. We're going to remove the 10,000 from the government funds revenue, because the 10,000 belongs to last year's government-wide revenue. Okay, and also we need to add the to be collected, the $150,000 to be collected as this year's government-wide revenue. Okay, by doing this we can convert 795 to 800,000, and this number will be reported in the government-wide financial statement. Okay, so let's see another examples. This one, the city sold long-term debt of $200,000 October 1st, 2019. The debt matures at a rate of $50,000 a year starting September 30th, 2020. So 2020, September 30th, we're gonna pay principal $50,000 plus interest. Right? So interest is payable each September 30th. That is 4% on the outstanding balance. The city's first debt service payment is not due until September 30th, 2020. So estimate the amount of interest expense and interest payable for 2019 and 2020 in both the government fund and the government-wide statement. Alright, so let's see government fund. For the fund, for 2019, because the city didn't pay anything in 2019, so the interest expense should be zero, right, for 2019. And for 2020, the city is going to pay 4% of $200,000 for the whole year. So that's going to be $8,000 interest expenditure. Call this expenditure. And because the fund in government fund we do not accrue interest payables, right? Usually, so there's no interest payable for both years. So government-wide, let's see what is the expense. Government-wide interest expense for 2019, although we didn't pay, we have to accrue the interest, right? Under the accrue basis accounting. We need to accrue how many months interest? 3 months, October, November, December. We need to accrue 3 months interest expense, and that's going to be $2,000. So we basically debit interest expense $2,000 and credit interest payable $2,000. So we know the payable will be $2,000. So the payable will be $2,000. Next, 2020 2020, the September 30th, 2020, they're going to pay $8,000 cash, okay, among which $6,000 will be recorded as interest expense. So debit interest expense $6,000, going to debit interest payable $2,000, credit cash $8,000. Okay, that's September 30th. Then by the end of the year, we need to accrue another 3 months' payment, interest payment. Now the principal has been reduced to, we paid off 50, the principal will be 150,000. Okay, and 4% of that will be $6,000 per year, and for 3 months, that's $1,500 interest expense and interest payable. So for 2020, government-wide interest expense will be $7,500 and interest payable will be $1,500. Right? Reporting special purpose governments. Generally speaking, we must adhere to the same reporting and disclosure requirements as the general purpose government. Okay, and we must prepare both the government-wide and the fund statement if engaged in both the business and the governmental type activities, just like a primary government. But if we engaged in only a single governmental program, okay, then the government-wide and the fund statement can be combined, okay, if it's only a single governmental program. If engaged only in the business type activities, you can choose to report only the statements required for enterprise funds. Okay, so there's no need to report a government-wide. Basically, they will be the same. It will be a duplication, right? And also include key elements of financial section of the comprehensive annual financial reports. Next, I will talk about the how to assess government's fiscal condition. Okay. That relates to the project. Assessing a government's financial condition is a daunting task. Okay, very difficult task. The cover is a single richest source of data in assessing the financial condition. Okay, it provides only raw data, relationship, and trends, and the burden of the analysis fall upon individual users. So all these are raw data, and we need to organize and do our own analysis. So a comprehensive analysis assessing, for example, a city's fiscal status or any government agency status has the following 4 steps. First, we're going to review the current economic, political, and social environment. Right, for example, we need to understand the jurisdictions, its current demographic information, right, economic conditions, and political climate, for example, the structure of government, the competitions, and social environment. Basically, once we understand these, we can better understand the next step. Those factors or ratios or numbers can better understand, explain those things. So step 2, identify and assess the impact of key factors likely to affect the city's economic, political, and social environment in the future. Okay, so And these is going to help us better predict the trend, okay, of the fiscal conditions for the city. Okay, and next is assess the city's current status as reviewed in its comprehensive annual financial report. So in this step, we're going to basically do a lot of calculations. We're going to do ratio analysis, trend analysis, or comparison analysis. Compare the city's results with other cities that is similar size and economic conditions. Okay. And finally, we're going to forecast the city's fiscal status for the next 5 years or even longer. This is a process for the assessing a city's fiscal status. A full step is provided in the textbook. So we're not going to see all these things, but in this lecture, we're going to talk about mainly this point, okay? Assess the city's current status as reviewed in its comprehensive annual financial report. So we're going to collect data from the report and you use ratio analysis to show the city's current fiscal condition. So what are those factors that are going to affect the fiscal condition of the government agency? We have the demographic information. For example, the age of the population, right? You see, think about it. The younger the age the population is, then the more economic potential this place has, right? If the population is getting older and older, you're going to see that the economy is going down for sure. And income distributions, educational levels, all these are going to affect the government fiscal conditions. And economic conditions, we need to know the composition of taxpayers, right? So who are their major taxpayers? What are those industries, right? So we need to understand these things. So it's better to have a very comprehensive composition of taxpayers. The city, for example, if the city relies on only oil and gas, then if the oil and gas industry goes a little bit down, the city's fiscal conditions will be hit, severely. That's for sure. And political factors, for example, government structures, political competitions, integrity of officials, and political climate, right? Which is especially important in these days. And social considerations like crime rates, right? The house ownership, those kind of things, going also affect the city's fiscal conditions. High crime rate and lower home ownership probably can hit the city's the fiscal conditions, right? And also affect the city's budget. Okay, city's budget will be different. Other factors included like populations, enterprises, technologies, and political changes, policy changes, these kind of things. So our purpose is not to be an expert in the government agency analysis, but okay, if we can understand what are these things, and potentially they'll be useful for us to explain to explain our calculated results, and potentially they will be very useful for us to predict the city's future results. So some of these factors can be obtained from the CAFRA in the statistical section. It has already provided tons of data over there. We may also get data from the Bureau of Census at this website. Just put the zip code or the name of the city. You're going to see a lot of statistics there. For economic related information, we can visit Bureau of Economics Analysis, this website. And for employment related information, we can visit the Bureau of Labor Statistics at this website. Financial indicators. So we're going to find and calculate financial indicators to show the city's fiscal condition. Rule of thumb. There's no reliable rule of thumb. Okay? So it's just an indicator, it does not tell us the whole story, basically. Government account for operations in different ways. So some ratios may not be directly comparable, so I have to keep in mind. Whether low or high ratio is preferred is not always clear. High or low ratio depends upon the stage of the maturities. For example, the city is in huge growth stage, the city in a very mature stage. Those explanation will be very different, and of course the focus will be different, right? When the city is growing, right, and the city is going to spend a lot of money in infrastructure. So in the fund statement, we can see huge expenditures. Of course, going to load up a lot of debt. That's for sure. So it will be different. Ratio are no better than understanding numbers. So don't 100% rely on the numbers and ratios, but we have to put them together. In one picture. Plus, right? We need to understand those factors behind those data. Then we can make a proper conclusion. So more effective analysis requires that indicators be studied over a period of time, okay, and be assessed comparatively among similar organizations. So if you're looking at Houston, better to find a similar city like Dallas could be comparable to see to see which one is better. That is comparable. Issue in interpreting financial indicators. Should ratios be calculated based on government-wide, general fund, or a combination of both? So it depends on why the measure is being calculated and how it will be interpreted. For example, if we want to look at a whole picture of the government, maybe the government-wide statement is a better choice. If we need to look at a specific program or function, then the government funds could be a better choice. So it really depends. So the first financial indicator is fiscal effort. So the fiscal effort measures the extent to which the government is taking advantage of its fiscal capacity. That is, right, the government may levy high tax, right, to get revenues. That is a measure of fiscal effort. So let's see what are the indicators we have here. So first is the fiscal effort. So we get this from the general governmental fund statement, because we want to just take a look at government activities only. So fiscal effort equals the total government funds revenues less the total government funds intergovernmental revenues divided by median family income. Okay, we can get this median family income from the statistical section of the coffer with a demographic per capita, the demographic sections. That is per capita income multiplied by the US average family size. Currently it's 3.14 person per household. So obviously the higher the ratio is, right, the higher the fiscal effort is. Government the tax levied is higher, measured as per family. Another way to measure this fiscal effort is the numerator will be the same, but the denominator we change to the total appraised value of properties. Okay, again, this is available in the statistical section. The taxable value of property. Right, again, the higher the ratio is, the higher fiscal effort the government has. Right, so per dollar properties, the tax is higher. So but this ratio also tells us there's a limit to the fiscal capacity, right? The government cannot levy tax over its fiscal capacity. So if the fiscal effort is higher, so we know the room left to the government to increase tax is limited. We need to understand that. Then we look at short-term financial positions, ratios, operating position. Again, this can be calculated with a governmental fund. Operating positions equals unassigned fund balances from general fund divided by total revenues from the general fund. Right? This measures the ability for the government to handle unforeseen resources needs over the short run. Do they have, money or funds to pay for to satisfy the short-term needs? Liquidity ratio, again, it's from the government fund. Right, it's cash and short-term investment, cash and short-term investment from the general fund divided by total liability from general fund less deferred revenues from the general fund. Right, we have seen equivalent ratio in financial accounting, the same thing, liquidity ratio. Right, in fact, this is an asset test ratio version of liquidity ratio. So this measures the ability of the government to meet short-term obligations with its current assets. Okay. Resource growth. Resource growth ratio equals the change in government activity net asset divided by total government activity net asset. This can be calculated from the government-wide statement. Okay, so this measures the growth or decline of financial resources, rate of growth or rate of decline of financial resources. A positive percentage demonstrate improved financial performance, right? Which indicates a better position to face future financial challenges. So if we have a trend showing a negative, right, or decline financial resources for multiple years, then something must be wrong with the city or with the state. The next set of indicators, revenues. So for revenues, we look at these two. By the way, these are just the selected ratios. There are tons of ratios over there, but these are the selected ratios picked for this course, because these ratios are the ratios we can follow. Okay, there are some other ratios that need proprietary data that we cannot follow, basically. So revenues, first ratios for revenues is adequacy of revenue. So that's total government, that's from governmental funds. Total government funds revenues less total government funds intergovernmental revenues divided by total government funds expenditures. Basically, this shows whether a government's own source revenues can cover its expenditures. Okay, that's why we subtract the governmental funds, the intergovernmental revenues. Those are the grants. Okay, so if the total revenue less the grants, that's government's own source revenue. The next revenue indicator is stability of revenue. Some revenues are not stable. Okay, some revenues are stable. So the revenue that is not stable, that is intergovernmental revenue. Okay, for example, the grants from the federal grants are not stable at all. They can reduce grants or cancel grants easily. That's not stable. So this is calculated as intergovernmental revenues from funds other than capital project fund divided by total revenues from funds other than capital project fund. Okay, the low ratio is better. Or alternatively, we can calculate the property tax revenue percentage. Right? Basically, the higher property tax revenue, the more stable our revenue will be. Right? Property tax could be the most stable revenues for government. Next set of indicators is long-term solvency indicator. First is debt burden. Okay, the data can be get from the MD&A and the statistical section. Basically, this ratio is total tax supported debt outstanding divided by population, or total tax supported debt outstanding divided by total appraised value of properties, or the same numerator divided by per capita income. Okay, all these can be found in the MD&A and statistical session. The low ratio is preferred, right? For sure. Nobody want to load too much debt. Okay, if the state resident or city residents they have a high tax burden, then it makes very difficult to issue new debt to fund future growth. Right? And debt service costs. This can be measured from the governmental fund. The debt service expenditures, principal and interest from debt service fund divided by total expenditures from general fund and debt service fund. Low ratios suggest the entities can pay its debt when due. Right? If it's higher than extremely high, then probably there's a risk of default. So finally, what we want to achieve, goal of financial analysis. Basically, we'd like to evaluate the ability of a government to provide services expected in the future. Right? We do not expect the government to make a lot of profit, it doesn't matter. We care about whether it can provide high quality service to the public. Okay, the revenues might know, but they can they can levy tax, okay, or they can borrow money, but can they increase tax, or can they borrow more money? Those are the things we need to consider, right? And we will prepare performance statement, right? So going to make adjustment to make those financial statements comparable among different government agencies. We need to identify key risks and uncertainties about the city, about the state, and we can examine numerous questions, what if questions, okay? And in recent years, the stress test is becoming more and more popular. So what if the Houston is hit by another hurricane? What's going to happen to the city's fiscal conditions, right? And what if the economy, is further down because of the low oil and gas? Okay, so we can answer those kind of questions in our financial analysis. All right, this is pretty much for this lecture.